Good morning. Welcome to the Techno Fundamental Report for August 22nd. New book, summer reading. Really liked this book. It says, When Geniuses Failed. And it's a story of the rise and fall of long-term capital management. John Merriweather headed up a team of PhD mathematicians who came up with this concept of arbitrage within the bond market, which turned out to be a disaster. And what was interesting about the story was basically what Warren Buffett said about the story was, beware of geeks bearing formulas. Basically, with these people, their egos got so out of control that when things started to go south on them, see, they started this partnership. It was an investment partnership. And when they first started it out, it was doing quite well. But by 1998, it started to fail. And it potentially was a $1 trillion problem that could have destroyed the banking system. It was an interesting story. Read the book. It's worth doing. You know, I wanted to show this slide because it's not very cheery. It's a negative. When I cannot balance my checkbook or I have my expenses exceeding my credits, I get real upset. And so when you start looking at, the national debt and you realize that the national debt just topped 35 trillion. However, the true debt of the U.S. is 175.3 trillion. Some people even are saying 200 trillion. And this is when you take into account pensions, Medicare, and Social Security. So it's not a good story. It's a bad story. And it really points out to me, when it comes to investing, that inflation due to quantitative easing, which means printing money. Over the last 3.5 years, costs have gone up 40%. Well, we printed 40% more money. It's that simple. So when you print money, which is quantitative easing, you're causing long-term inflation is what it boils down to. So when it comes to investing, I really cannot even fathom the idea of investing in a bond that pays 3, 4, 5%, because after inflation, I don't see how you come out ahead. So equities, to me, stocks are the best solution. So let's look at some stocks here. First thing I want to talk about here on the stock market is the new drugs that are coming out for weight loss. Now, to be honest about this, I'm on one of these drugs. I'm actually on Ozempic. My doctor put me on Ozempic about a year ago. It was a new drug. Prior to that, he had me on metformin, and it's been incredibly successful. I've lost, I can't believe it. I tried Weight Watchers. I tried going to the gym. I tried all kind of diets. I couldn't budge the needle on the scale. But now I got on the scale the other day, and I'm down, 25, 30 pounds. It's fantastic. Also, I had sleep apnea, which has gone away. So there's a drug out called trizepatide, which is manufactured by Eli Lilly. Now, Wegovy, which is semaglutide, is manufactured by Novo Nordisk. But yesterday, or this week, Lilly announced a test result that was absolutely fantastic. It basically says Eli Lilly's weight loss drug reduced the risk of developing type 2 diabetes by 94%. So if you are pre-diabetic, which I am, and I recently had my blood work done, and I've had tremendous improvements. This is a breakthrough drug. There's just no doubt about it in my mind. But the thing I want you to pay attention to on this particular graph is the delivery system, which is interesting. What they're using is something called subcutaneous injections, which is a little tiny needle attached to a mechanical pen that is spring-loaded, and literally you can inject this drug into your body within 10 seconds. It's just the way to go. So there is a company out there that we're interested in, we actually own, called Halozyme. Now, Halozyme, you have to think of their product, it's called Enhance. And it's a proprietary product. This is a biotech company, and I'm going to show you in a minute how profitable they are, because most biotech companies are not profitable because they spend so much money on research and development, which really means trials, patient trials to prove to the FDA that the drug is effective. But this particular study went for 3 years, and the people that came out of the study came out no longer pre-diabetic. It's really amazing what's going on here. So back to Halozyme, you have to think about this product Enhance it's like a paint thinner, is the way you have to think about it. Because what you're having to do is take somewhat a thickness of a pharmaceutical, which could be trizepatide, and you have to water it down enough so that it can get through that little needle under the pressure of that mechanical pen. So I think this is one to really keep an eye on, and same for Eli Lilly. Eli Lilly's stock, you can see here, nice uptrend, so forth. They're also saying that this particular drug, trizepatide, helps with things like heart disease. I already mentioned sleep apnea. The other thing too is with the subcutaneous injection, you're not going through your digestive system like a pill. I think it's a far superior way to go. So if we look at the numbers real quick on Eli Lilly, and the first thing is, the most important number to me, is the market cap of this company. It's over $900 billion. It's almost $1 trillion. So is it somewhat discovered? Yeah, I would say it is. Now, the profit margin, excellent. Return on equity, excellent. Their revenues are $38.9 billion. Their revenues jumped 36% over the last year, and their earnings have jumped 68% over the last year. Balance sheet-wise, they look pretty good. 1-to-1 current ratio, which I'd like it to be a little bit higher than that, but that's because they're having to service. They have a lot of debt because they're making acquisitions, actually. And so is Halozyme. They're both making acquisitions. But if you look at the profit margin on Halozyme, it's 38.62. Now, remember, this is a biotech company. Most of them are not profitable. This one is. Return on equity, 153%. That is fantastic. Nice positive cash flow, especially after debt service. Revenue, getting close to $1 billion. Revenues were not up as much. However, the earnings were up around 25%. Cash is good. Current ratio, almost 7.5 to 1. So pretty solid looking balance sheet to me. Now let's talk about the market for a minute here. Now with the NASDAQ, we got 2 follow-through days, and those were days where the volume had to be higher than the prior day, plus had to be up approximately 2%. So we had a follow-through day here, and then we had a follow-through day here, and you could argue this is a follow-through day, but it's kind of looking that way, but I'm not sure about the volume. Yeah, the volume was lower than the prior day, so this was not a follow-through day. But the negative here for me is that I don't like V-bottoms, but with quantitative easing going on, what happens is we'll get a major drop in the market, then the Fed starts printing money again, and we get a bounce back. So the NASDAQ is in a constructive pattern. It is above the moving averages, so that's a positive. Small caps, we're actually seeing, it's a little bit of sluggishness in here. Not a lot of follow-through days with the small cap index. Now, this is the S&P 600, which is different from the Russell 2000, but the 600 companies are more solid than the other ones. I think it's the better small cap index to look at. You can see here on the S&P, Standard & Poor's, we got some follow-through days here, and again we got that V bottom and a strong uptrend. The worry here is the market going to come back down again and retest these lows again? Possible, but right now today everything looks fine. Now the good news also for me is the equally weighted S&P 500, which is looking very positive. This means the market's starting to broaden out. It's more than just 7 stocks, the Magnificent Seven. We're starting to see more companies starting to participate. So let's look at a couple of these companies. Well, first, let me touch on interest rates real quick. This is the power index. Interest rates are definitely coming down. There's no ifs and buts about it. The power index is showing a definite downtrend. And again, as long as the Fed continues to quantitatively ease, interest rates are going to go down, but it's somewhat artificial is the problem for me. Now, here's a company called Shark Ninja. This is an interesting company. Now, one of the things I like to look for, and I'm going to mention this in the graph. First of all, let me see how I've got it set up. We got the trend meter. We've got several moving averages, we got volume, and then we got 2 levels of relative strength. All look very positive on this. Shark Ninja sells electronic devices on Amazon. They're one of Amazon's largest sellers, most consistent number 1, number 2 seller on Amazon. We're looking at a $12 billion company. You can see here they announced earnings, gap up, consolidation, trying to break out again. If we would see volume up in this level here, this stock, this particular base will be a good launching pad for hopefully another move. Now here's a company called Doximity. Now this is another interesting story. Now what you have to realize about what's going on in the market right now, there's really 2 areas that I'm seeing that are the strongest. One is artificial intelligence and the other is weight loss drugs, which we've talked about. Doximity is a software for physicians, doctors, the whole medical community. They're the largest in the business. Now what's happening here is that because of artificial intelligence, these softwares are benefiting. For example, if a doctor has a meeting with a patient, the system picks up the audio on the discussion, and then as the patient leaves, the computer automatically writes a report, and so the doctor doesn't have to stop what he's doing and go write a report. So it increases the doctor's productivity. I've talked to a couple of doctors about this. They said it's quite amazing. But again, we've got a nice gap up here on earnings. Again, during these earnings reports for the 3rd quarter, a lot of these companies have come out and discussed their AI advancements. This company did that as well, and you can see the result. And we've been getting some consolidation here. The pattern over the last 3 days is somewhat tightened up, and that's good. You want to see where there's equilibrium. In other words, you don't want to have a bunch of buyers and then a bunch of sellers, bunch of buyers, bunch of sellers. This is somewhat of a case of parity in here, so that's a good sign. Now here's NVIDIA. We've got NVIDIA announcing earnings on the 28th. That's going to be an important date. You should mark your calendar. NVIDIA, the only problem I've been having with it, we were in the stock in the 1st quarter, and as you can kind of see, it started to fall apart. You know, it's pretty apparent, it's pretty known, it's kind of an obvious story, so that's what bothers me a little bit about it. But it is developing an uptrend, somewhat of a V-bottom like a lot of the NASDAQ itself. However, the thing that's not happening is we're just not seeing that oomph, that strong volume coming in with a lot of conviction. But with the earnings report on the 28th, that could change. So if you have any questions, please let me know. Thank you very much.